Today I am bringing you a stock that consistently beats the market, and it absolutely blew the S&P 500 out of the water last year. So currently the S&P 500 has had a great year, around about 29% gains in that year, so you have to find some really good stocks to beat that. In fact, 2021 was one of the best years in the last 20 years. You can see we haven't had 29% since 2013, and basically all of the 2000s didn't really reach over 25. So this has been one of the best years in the last 20 years for stocks. So we've really had to look for special stocks to consistently beat the market. But I do think this is one today. So you can see here, this is a heat map of all the stocks and shares in the S&P 500. And you can see there's been some massive gainers, a lot of green. It's been hard to pick things wrong. But what we need to do is beat the market, because otherwise you should just invest in index funds. You can see here, big winners: Google, Microsoft, Nvidia will be doing, we said that was a buy, and that went up 125% in the year. Tesla's had a great year, but I want to bring you a bit more of a low-key stock, and there is a bit of a clue in the name. You can see here, if we go to the home improvement section, we have got Lowe's Company Inc. has had a 61% increase on the year, absolutely smashing the markets. If you said to me at the start of the year, Microsoft, who are just generating free cash flow like nobody else, are they going to be one of the leaders? Yes, but this company here has beat them pretty handily. So if we go to here, you can see that Lowe at the start of the year was trading at about 160 and is now just down from its all-time highs of 260. If we just compare it to the S&P 500 here, you can see that over the last year, it's absolutely destroyed it, and definitely more so in the second half of the year. And if we go 5 years, blown it out the water since the pandemic. Lowe's has had a crazy 2020 and onwards. And if you're an all-time investor, I mean, that is crazy compared to what the S&P 500 has done. But why do I think this stock is a good buy? Well, let's go straight into the fundamentals. But first, give it a like on the video. 22 likes for 2022 really helps me out, helps me get this video to as many people as possible and beat this pesky YouTube algorithm. But Lowe's Company Inc., ticker symbol LOW, market cap of 174 billion, and it has a share price of 258, 150 on the low and 263 on the high, so almost at its all-time high. Dividend is a 1.24% dividend, and we've got some bad formatting here, but the actual ex-dividend date is in February, so buy your stocks before then if you want to get the dividend. So first is the PE ratio, less than the current market, 22.45 to 28.5, so that is a massive pass. Is the revenue increasing 71 billion to 95 billion, so another pass again. Next is the profit increasing. Yes, it is 2.3 billion to 8 billion, over 8 billion, so that is another pass. Then, are they buying back their shares? Yes, they are. 839 million to 748. So Lowe's think their stock is underpriced because they're buying it back. They think it can go up in the future, and they are rewarding shareholders massively with this move. Great to see. Next is the free cash flow increasing. Yes, it is 5 billion to just under 7. So that is a perfect stock. 5 passes, as you can see here. And it has a free cash flow ratio of 25, 174 billion market cap divided by 6.8 billion. And then you can see 25, which is very close to the PE ratio, which is good to see. And is this dividend safe? Well, yes, it is. 6.8 billion in free cash flow and a 2.1 billion in the dividend. So that is 5 passes off the bat. Now let's have a look at my valuation of the stock. So what we do here is we look at discounted free cash flow models and the Buffett-Graham intrinsic value. And you can see here that if we look at that, well, that gives a stock price based on discounted free cash flow of $274.70, which is a 6.3% discount, which you may think in that doesn't look like it's going to beat the market. But one of the reasons why I like Lowe's is there's earnings per share and expected growth rate of 16.7% over the next 5 years. Analysts are saying this company is going to grow around 16%. The past 5 years, it grew at around 15%. So actually, growth will be increasing. So what does that give the share price based on the Buffett-Graham intrinsic value? Well, there you can see that is an absolute blowout once again. Fair value of 480 $2.27, which means it can go up by 86%, and a grain price, which is, if you see it at this price, buy and hold, which is $361.70, which would be a 40% increase. So if either of these values are correct, now the fair value is sort of the bullish case, and the grain price isn't necessarily a bearish case, but it's more on the safe side, and they are expecting 40% gains over the next 12 months, which would once again probably put this stock in one of the top growing stocks in 2022 and beating the market once again. Right guys, thanks for watching the video. Please give a like on the video, it really helps me out, and I'll be bringing more stocks which I think are going to be beating the market in 2022, because it's a lot harder as the stock market is going at a pretty crazy rate at the minute. So I'll catch you guys next time.